Hi traders, hope you are well. This is a coaching video for the price action charts. I know many of you have bought these at the special discounted price and you get 3-month signals, etc, etc. You know what you get, but I want to just clarify a few things. I've turned everything on, and with a little bit of experience, what can happen, you can just switch things off because you know where the prices are, where the resistance is. But when you're starting out, it's probably a good idea just to have them all switched on. But I'm going to do something to help you in terms of top-down analysis. So, a couple of things. The first thing is your stochastic should be the same as this. We've got the RSI indicator with divergence, negative divergence, and negative divergence, and positive divergence. So that helps you in terms of price action. So all of these indicators are based upon price action, what is going to happen rather than what is happening in the past. All right, so divergence is a leading indicator to tell the price is going down. Positive divergence is a leading indicator to say the price is going up. That's the first point to make. The other thing to point out is, as an example, with the stochastic here, a couple of things. You want to be buying low and you want to be selling high. Buy low, sell high. That's the conditions you want. And of course you want to go with the trend that you've got as well. So as an example, during this leg up on the pound yen in the last, well, this is going back to October now, but this is a 4-hour chart. I'm going to zoom in a moment, but whenever you see the price moving down into oversold, you can know that the price is going to move up with a fresh buy signal. That is your opportunity to buy, and you could close there for example once it becomes overbought. So that's one way of dealing with it. So once we get the bears coming in, this is a very high liquidity area, double top, and we have divergence at the same time, negative divergence. The bears are coming in, and therefore it breaks down here with a sell signal. So in this example, you could have had a sell down to the support area here, 181.39, or here. So there's lots of opportunities during this time once it breaks down below the blue line. I'm not explaining what these settings are because they are yours. Wouldn't be fair on everybody else who's bought the system and got the coaching and got the signals. So the other thing I've got here, if you notice, is the trend line breaks. Trend line breaks, which are helpful. Trend line breaks, break of structure, an important point. An MSB basically means break of structure. So let's see where we are now, and I'm going to dive in a little bit closer to the market. So this is a little bit cramped up here. So I've had to squeeze it in a little bit. Let's get rid of that. That's going to be annoying. Okay, so the first thing we can say is that we have negative divergence. That's the first thing. We can say that the stochastic is very high at the top of this, so the chances of it going higher are very, very slim. And we're into high liquidity zone there, the yellow. Let's move that out of the way. The yellow there, and there's a strong resistance at measuring 71%. Very, very strong resistance here, and there's a nice big fat order block here as well. So for this price to go up, there's a lot for it to do, isn't there? More than likely to go down. So let's zoom in. So knowing that, There's a liquidity zone there, so that was an opportunity to buy into the pound yen. You could wait for the trend line break, and it goes up to liquidity there. We can see that if this gets closer to the market, let's go down to the 2-hour chart. So the 2-hour chart came into liquidity here. There was your buying opportunity there. Let's draw a line. Let's draw a couple of lines as we get closer to the market. So as we get closer to the market, it seems a lot clearer, doesn't it? Once you've done your analysis, we've still got the same data, we've still got the same information. We've still got the order block saying red, sell, 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 and you can wait for the break of this trend line here if you wish. I'm a little bit more aggressive, I have to say, because I'm not at my chart all day. It's just the exception this morning. I'm not playing golf. Then, of course, I've got a bit more time to help you out, and I'll come back during the New York session this afternoon to see what's going on. So as we can see on the 2-hour chart, we have strong resistance, we have negative divergence, and we have a stochastic pulling up into a high value area. Let's go down to the 1-hour chart. So I drew these lines earlier, if you remember. So what you can do here is just emulate the chart. You can have two charts together as an example, exactly the same charts but different time frames. You could have the 2-hour and the 1-hour. Whenever it comes above the blue line in the buy signal, that's your opportunity above the blue line once you've done your analysis. So now we've done our analysis, we've got negative divergence in the market, we've got very, very high strong resistance into an order block, and the price is trying to pull down. You could go closer and closer if you wanted to, but it's not necessary. 2-hour time frame. Four-hour time frame. Now there's high liquidity down here at 29%, not massively. So the price could, as an example, come down to here, where there's going to be even higher valued support line. But that to there, 183, it's about 230 pips anyway, with a very, very high risk to reward. Nothing's happening at the moment, but nonetheless, it's a very good way to analyze the markets using all the tools. As I say, I often turn my tools off because I know them. They're not going to change anytime soon, and you will actually get used to that as well with a little bit of experience. Hopefully you enjoyed that. Just a 8-minute video, but highly useful, I hope, in terms of direction, divergence, price action, market structure.